All right, everybody, welcome to the show, podcast, our weekly, monthly update.
We're back. We're back.
We're back. We're back
Oh
in the
yes.
professional studio locally. You know, we got Carlos, Ollie, myself, Abbas, your local realtors from the SAD Avila Group. Basically, we're always here to talk about, and this podcast is for our investors, buyers, sellers, anyone who's in the market, actually doing real estate. No headlines, no fear, no hype, none of that stuff. Just shop talk, and we're here to basically talk about what's actually happening on the ground. So, prices, financings, mistakes we're seeing that some of our clients are doing, and we're basically here to actually talk about what people should be doing and giving out free tips and about the local market. So whether you're selling your property, buying your first property, building a portfolio, or thinking about selling, this little snippet of a show is good for you and going to help you make better decisions with real numbers, real experience, and your track record proven realtors.
Yeah. No, thanks for the intro. So we had done some podcasts like this a few years ago where we just get into some statistics and just buyer psychological stuff, just explaining to the people what's going on in the market. So yeah, let's get into it, Carlos. We want to start with the residential side and see.
Let's do it. I mean, what's actually happening in the market? So let's just
Yeah, so
start off with Carlos.
market right now it's pretty stable since the end of last year. I think we've all seen that market is getting more stable and stable with time. Buyers and sellers are still, well, basically they're coming back on the market. It's pretty stable. What can I say else?
Yeah, well, there's a lot of movement. There's been, if we look at what's going on since last year, just looking at the statistics, there is a lot of volume.
Yeah.
A lot of transaction are happening. It's very transactional. So there's a ton of volume. It's not the market that we would see in the pandemic where, we'd say this: you put up a house on the market, you get 50 showings, and there's 15 offers. Occasionally, you'll see some houses where there's going to be bidding wars, but it's not 50,000, 100,000. It is active, but we feel as if it's a bit more balanced, right? We're putting listings up right now, and on a good weekend, if you do the right marketing, you should get between 5 to 7 showings on your house, and hopefully an offer within the first week or two. So that's for us very successful in the eyes of our clients when we're mandated to help the sellers sell their home. If we see movement within the first weekend or two, and ideally an offer, that means we've done a good job at the marketing, and the buyers are out there, right? All you need is one buyer. But if there's no action on the property within the first, I'd say, week or two, there's something going on. It's most likely we tried in the higher price bracket, and we probably have to sit down with our clients and readjust. There is opportunity for buyers out there. We're seeing it. So it's less of an anxious process for our buyers when they're on the market and they're looking for a home. So they do have a bit of selection. I wouldn't say they have a ton of selection. If it's in a desired neighborhood, depending on the price range. If it's a first time home buyer who's looking for a semi-detached under the 550. I mean, I don't think it doesn't last too long on the market. We're seeing houses on the market from the 400 to 1.5, 1.6 million. So it's moving in every single price bracket right now, even last year. So they just announced yesterday that the rates are stabilizing. So
That's
I think
good news.
that's good for buyers and even for people who want to renew their mortgage. It's not spiking up, so it's. I mean, we're very optimistic and positive. There are some headlines saying that is there going to be a doom? Is there going to be a crash? I feel as if it's a bit more balanced.
Yeah, I kind of want to chime into there because, people keep asking us if the market is crashing. There's a lot of headlines out there, and I'm curious to see, bro, from what you're saying is that it's a stable market, and also from what I'm seeing is it's quite stable. It's not pandemic crazy where we had lineups of 10, 15 people in front of a house, and you guys would get $100,000 to $200,000 over asking price with 10 or 15 offers in.
No,
Yeah, it was a one-side market only back then. It was
That's
only
right.
sellers.
I don't say
Sellers were.
it wasn't that fun. Even if we were dealing with a ton of
Yeah.
listings, it was, we had whole systems in place to get to ease everyone's mind, but it was fun for some sellers. But I mean, it just wasn't that natural
I think
process.
we're back to a local, a traditional market.
Yeah.
I see everyone posting their 2016 challenge. So we're now in 2026. So if we do the 2016 challenge in real estate, it's very, very similar, where buyers have the time to actually tour, a few properties. They can go see 5, 10 houses,
Yeah.
and the house that they like, they can actually put an offer conditional for them to sell the house that they bought in 2016. So it used to be like that. It's now like that. However, the only difference with then and now is the inventory problem. So we do have buyers, but we have less inventory. So this is driving the price a little, it's following a bit of inflation. We're not seeing 10, 20% year over growth on increasing of real estate value. We're just seeing, a stable increase, which is not too crazy, but it's not crashing. It's not going below for the real estate market and the value, because the buyers are still there, and it's still a healthy price point. The rates have trickled down also. So we
Yeah,
see.
we're in an interesting market where, yes, we're in a government city. The slashes are happening. Okay.
Well,
So
look.
people are getting cut. We're gonna see what happens with that.
What do you think is going to happen when, I mean, look, it's all over the news. We're, went through, January 2026, going into February 2026. Like, I'd say a good 60 to 70% of people that are buyers and sellers work for the government. We are in the nation's capital here. It's always been and always has been and always will be a government town. Now, it's always been a safe market because of that. What are we feeling now? Because I feel a lot of anxiety with our public servant clients, friends who are losing jobs. They're being affected. I mean,
I just
people
had a
are
call-
saying
yeah.
our market's gonna crash. So what is going on? I know it's early, but what's your take on this?
Yeah, go ahead with your story. You just had a
Yes.
call. We've talked about it.
Basically, we don't have a crystal ball, so we don't know what the future is going to
Yeah.
hold. There's a few interesting things that you said, but yeah, I just had a call with a client yesterday. They got their notice and they're going to lose their job. So it doesn't mean that they're homeless and they don't have income. They have a guaranteed income, if I'm not mistaken, for at least 12 months. And
There's all these buyout packages and
yeah,
there's
depending
a bunch
on
of things that could be done.
the race is there. The more people get laid off, the more the market's going to get saturated in terms of trying to switch departments. So for sure, it's going to bring a bit of create a bit of, I wouldn't say chaos, but uncertainty and anxiety for buyers. But how will this affect the real estate market? I mean, look, we don't have a crystal ball. We'll see what happens in the future, but we still, I feel as if, given the fact that we're not building enough homes, yes, immigration is going down, but I think if you compare Quebec to Ontario and other provinces, we have the most, one of the provinces where we have the most tenants in Canada, in the nation, and tenants do lead to potential buyers. Everyone has a dream of buying a home, so if affordability is accessible to them, I think it's just going to be good for the market. But for the government workers, they're in solution mode. They're applying for other jobs, those who've been laid off, or they're gonna have to find another line of work.
If you don't have a job, you can't pay your rent or you can't
No.
buy a house. So
Well, they're gonna
I
go on the
think
market. Yeah.
everyone's kind of stressed out about that, right?
Of
What
course.
do you think, Carlos?
I mean, I
gonna
was gonna ask you guys a question, like with everything that's happening right now with the government cuts and everything. Like, of course, they have some buyout packages and stuff like that, but do you think people are gonna still like either put their plans on pause to buy a house?
Look-
Is it gonna bring more people in the rental space?
Look, there's like two answers to that question. I do think there is going to be a pullback and not a negative pricing or a crash for what I say. I do think the high-end listings will definitely have a harder time to get off market because most people are going to hunker down because inflation's high, groceries high, gas is high, real estate's high. So, I mean, their number one priority is getting shelter. So they're going to rent and they're going to buy a house, right? Now, typically, if you have a job with in the medium income, then you're going to stick around the average home price, which is $400,000, $500,000, $600,000 in the Gatineau and Ottawa area. So that price point, I don't think is going to be that much affected. I think people are going to stay in their house and upgrade less quickly. Like we've seen turnovers quick. Like people would buy a home and like it used to be about a 5-year average turnover where people who bought a home would sell their first home after 5 years and buy that bigger home, right?
I think it's typical as well. Younger generations,
But
we tend to stay less
I do
less long in a
I,
house.
I do think that they're going to stay longer in their first home. So
Yeah.
instead of turning over in 5 years, they're going to
Good
keep it
point.
for 10.
It's an interesting point because the boomers and the older generation are doing that as well. We noticed that they're, they've been in their home for a while, but I feel as if their lifestyle are a bit more active, so they don't necessarily need to maybe downsize or go in those condos. So that is putting a little bit constraint on inventory as well. Those
So
Yeah.
the second answer to that question is, I said the high end real estate's going to have a little harder time, but the high end rental is also going to have a harder time. So if we're going into investment, I see my builders scratching their head a bit because they're building on pro formas and basically they have to grow their rent year over year for 10 years for the numbers to work. But the math ain't mathing
No.
if in any
Yeah.
big or major project right now. So they're building less. So you'll see a lot of people who are in the middle of a build and they're going to finish building, and then in order to refinance their construction loan, they're going to have to achieve a rental target that is not achievable. So a lot of people are going to not have a good time renting out these buildings that they thought would rent out at, say, $3,000 a
but we're
unit.
seeing that in Montreal already. They're handing over the keys.
There's some stuff going on in Toronto, Montreal,
It's
with bigger
different here,
buildings.
but yes.
But yeah, I do see people who are building on numbers that weren't quite solid. A couple years ago, where they were underwriting and targeting higher rents that they're not hitting.
Yeah.
So the high end rental is going to have a harder time. But then again, the tenants who want to rent those high end units, they're going to have a great time negotiating builders. They're going to get
Exactly.
freebies, free months. I call them building hoppers.
Yeah.
They're living 1 year in this project and another year in this project, and they're riding a wave of free months. So, the rental market is not all, it's hard to achieve what you're trying to achieve in rental in the high end. I'm really seeing it. I'm feeling it with a lot of our institutional and private investors. So we're going to see less building, which is not good because they're going to build less units when you need some. But the math is not mathing because, yes, you want to build, but the price of construction is so high that you have to rent them at this price unless the government subsidizes and gives, tax breaks on
Yeah.
these projects. So there are pockets where in Ottawa and Gatineau where you can get some tax breaks, but it's not working. Now, on the other hand, the heritage assets, like the older buildings that are
Class C,
competing,
Class
yeah,
B.
I mean, anything built from 70, 80, 90 buildings, like a 6, 8, 12, 24 units, you name it, they don't have many, like that doesn't have elevators or a pool and all that. Those are full rented because, like, if you're giving an example, renting a 2-bedroom in there is like 1,400 versus you're going in a building with an elevator and a pool and a sauna and all that stuff.
But do you
It's
think
like 2,
builders are
3K.
going to change their approach on it? Like, it's very popular nowadays that you rent like fully equipped. You have a pool, you have a gym,
Yeah.
you have everything included. Do you think they're going to change their approach with time? If we take a look at the situation right now,
I mean, look, the only thing they're gonna have to change is trying to make the numbers work. And the only ways for the numbers work, it's like any other business. You increase income and decrease expenses.
Put down your expenses.
So your income is your rent, your expenses are your operating. So like, maintenance for the pool and the grass and all that, that's quite easy. But the biggest expense is building that building. And building that building is not going down
Yeah.
because the cost and the supply chain and all that stuff is very, very difficult. So the rental is the small affordable buildings that are affordable now are not going to be that affordable anymore. So you'll have tenants who are going to be like squeezed out of the market because of that. They will never get out of the rental market because it's climbing up and climbing up. And then once they come back into the real estate where they're not even building a lot of houses anymore, the prices of the house are still high. So, I mean, it's very tricky. It's very difficult. So, I always tell our clients, like, if you're in a position to buy, because it's not to speculate or say you're going to be a millionaire. It's just to, build that net worth over time.
Yeah.
It's a secure investment, real estate, especially in our city. But there are solutions to that. We're seeing more and more parents and grandparents getting involved with giving their kids their down payment. So instead of giving them when they pass away at the estate, so all their wealth, then they're actually transferring wealth right now.
Yeah.
So kids who are coming out of university, having a hard time to say. Well, we have parents who have major equity because their house that they bought for $100,000 is worth $1 million. So instead of
Beneficial for them to gift that, because if ever they have all that equity, whenever fortunately they pass away,
it's tax-free.
The gifted down payment is
yeah.
tax free, but whenever someone takes care of their estate, that
Well, there's
all
tax.
of that is taxable.
There's the estate is taxed, so whether it's from so there is a form of tax, but more people are being more generous with their kids and their grandkids, so they can have access to the property. So we're seeing a lot of creativity on that.
Yeah.
We're seeing people pool together, parents and kids, pooling together and buying maybe bigger houses and transforming them into bi-générationnel, or a duplex home. So you
Yeah.
have two families living in one house. So there's a lot of creativity that's being done, and that eases the pressure on the finances. So I think
It's beneficial for both sides, for the parents and the kids
Yeah.
as well.
And I think what I'm seeing is a lot of resilience with the buyers, even though it's super hard. We're making it work, right? So, or they're moving into provinces where it does work. So we see a lot of people from Ontario moving to Gatineau because real estate is more affordable. We see Ontario people moving to Alberta because they're getting less tax and they have better jobs. So there's ways to make it work. You just have to
have to adapt.
find a solution.
Exactly.
Yeah, exactly.
Be in solution mode. So for those of you who don't know, we're Group Sat Avila. So we all handle real estate, the residential, but Abbas is the commercial pro. So this is why he's giving his insight on, all this stuff in the market. So it's interesting having your take on this. I just want to go back on the residential side of things because we talked about the houses. We'll get into condos and what's not going very well, the condos, but to give you an example of how the 2025 market performed in Gatineau, like the stats are quite interesting. If you look at the average prices, but in terms of volumes, these are estimate numbers. It's around 4,733 transactions in Gatineau, if I'm not mistaken. That's up 3% from 2024. It gives around $2.4 billion in real estate volume. So, like I said, it's transactional, and the home prices have appreciated even since the pandemic. So it's still good. We'll see what happens in the future. So that was just an insight I wanted to share with everyone, and we're being optimistic. But depending on what happens in the market, you just have to sit down with the experts and know what type of game plan you have to make based on your plans, right?
Yeah. So, talking about game plan, like when does selling actually make sense? Is there a time? We get that question a lot. Carlos, when someone calls you in 15th of December, just before Christmas, are you telling them list right now?
You have
or
to sell right now. Christmas is the best time. Everyone knows that, right? No, honestly, it's people are starting to prep their house or their plans. Like we get calls now. We're ending January.
Yeah.
Phone is starting to ring more and more.
A lot of appraisals.
Exactly, and I mean it's a good time to start thinking for the preparation part of the entire process. But I think March, April, it's like the months all listings are going to come. There's going to be more and more inventory. It's good for buyers. It's just a strong start, and it's strong months for sellers. Basically.
Yeah, I mean, if you look historically speaking at the price charts, usually the spring market have strong prices compared to when you're looking at October, November, December, right?
Yeah.
Sometimes in some markets there's that last little boom at the end of the year where buyers missed out in the spring and they're coming back in the fall, in the winter time. But the best time usually is springtime, for sure. You see the better price ranges there. But honestly, it's all circumstantial. Depends. Like it depends if this lady that we just met last night, she's been in her home for a long time and she's waiting to go in a retirement home, but she's on the waiting list, right? So it could happen that she gets a phone call tomorrow and we list in a few weeks.
You can't always plan the right time.
And it can happen she gets a phone call September 15th and we list, at the end of September, beginning October. So circumstantial, but if you're ready to sell. Generally speaking, springtime.
Of course.
For sure.
There's been some record sales in December as well. It's just generally speaking, spring is the best time to put your house on the market. There's more buyers. There's more active buyers on.
We're just right now. It's
prep season.
January 29th, and we're doing lots and lots of appraisals. Having a few listings coming up actually this weekend. Some people actually want to time the market before hitting March, so they try and try and time the market to not be competing against other potential home sellers. So, which is an interesting strategy. But yeah, right now it's just a lot of people being proactive. They want to know their home values and aiming for that spring market.
Yeah.
Yeah, totally agree with you guys on that. So, I mean, we can go briefly on what's not selling. I think you said condo. I think we all can agree on that. It's not that it's not selling, it's just that there's a lot of inventory and clients have a lot of choice. So, are you guys selling condos, or it's just you can list and never sell one? What's the situation?
Yeah, some condos are selling. Some condos are selling, but honestly, it's there's a ton of inventory right now.
Yeah.
There's a ton of
The
inventory.
wiggle room for the price you list the condo is tighter than a house. Like if you're off by 5 grand, 10 grand at most, you're probably gonna stick on the market for a while. So you need to be pretty precise on the price you list a condo first. But yes, generally speaking, nowadays condos they take a bit longer to sell compared to a townhouse or a semi-detached. You know, the basic houses that there's a lot of buyers for. And yeah, you know, we've listed few condos at the end of the year for some clients. Some people they like to try it out, and if it doesn't work, you put it back. You know, spring ideally. But yeah, it takes a bit longer. They still sell. It's just the time frame is longer.
Yeah, that's what I'm feeling too.
Yeah.
So, let's jump into our investor corner, if you
Yeah.
guys don't mind.
Of
Yeah,
course.
We'll go
Let's go.
briefly in that. So, what I see is a lot of investors are chasing cash flow without understanding risk. And there's a lot of angles and what things that you got to do, because cash flow, everyone sees the video, cash flow is king, cash is king. But what I'm seeing is cash flow is very hard to find. So everyone is chasing something that isn't really there. So you really have to be creative on deals. So I mean, real estate for me and my view with all of my clients and personally our investments are, you buy and hold it for a very long time. You can probably sell some if you hit the target that you thought you were going to sell it in 25 years. You can get that in 5-10. Well, that's just luck and some things in the
Or you
market happen.
refinance.
Yeah.
But yeah, obviously you refinance. So there's a lot of deals we're seeing that don't really make sense. People are buying triplexes and fourplexes with 20 to 30% down, and it's barely breaking even. So it's quite tricky to understand why that's happening. But there's a lot of foreign investors who are allowed to purchase these types of assets. So they're parking capital in Canada.
With the new laws, they can invest in income
They can
properties,
invent
but
in-
not homes. Or
Yeah, there's some laws that are preventing them from purchasing like single family home assets, condos, which is obviously great because they're not putting pressure on, what we just talked about, where, your average Canadian can't even buy a home because he's competing with someone, foreign capital that's buying the property cash, right? We've seen that a lot in Toronto and
Yeah.
Vancouver. It was a bit happening here, but a little less. However, it's like now they squeeze that purchase out. So what they're being creative. They're bringing their capital and they're buying multifamily assets. So we're seeing smaller multifamily assets, 3-4 units, selling at metrics that don't really make sense. So you and I will probably not even invest on those pro formas because the ROI is bad. Like the return on investment doesn't make sense. It's not ideal. So there's a lot of noise in that small market, and then in the bigger market, we have a lot less buyers. So which is great because when we only have serious buyers buying 12, 24, 100 unit portfolios. We don't have a huge market volume transaction in our area compared to the rest of the province, but we've been selling some big assets to some local private buyers, which is great.
so they were smart with their money. They have the funds, the
Yeah.
capital.
I mean, look, you can't just.
It's not mom and shop and mom and
It's
pop.
not mom and pops
investors.
buying these type of. There are a few small private buyers, but there are a lot of people who had real estate 5-10 years ago, who managed them well, maintained them well, created a lot of value, and they're just refinancing these assets and buying more assets,
Yeah.
underperforming assets that need huge cash down. Like sometimes we can sell a $5 or $6 million building, and the down payment is $3 million.
Yeah.
Really?
So the return is really bad at the
Yeah.
acquisition, but they're able to.
So they're buying distressed buildings. They're flipping it.
They're just burying it. Yeah.
and they're gonna flip it in.
So they're
in a
not
nice
flipping
way.
it. They're basically
Well, they're
injecting capital in it, and they're renovating these units. Most of the time keeping the tenants already there because they want newer units. So and they're increasing the rents on them, and they're not gouging them. The tenants are actually fine to stay at that price because they're getting new kitchens, new bathrooms, new toilets, so
Exactly.
they can get paid 25 to 50% more than what they were paying, and they're happy to pay it. And the investor, the buyer, is happy also because he can refinance that and
It's a win-win.
and increase the capital and repeat it, right? So there's not a whole ton of transactions, but whatever we're putting on the market, we're selling it all.
That's good. That's
Yeah.
good news for.
And I
for-
think
for the
it's
multi.
important to say as well, like for the the small investor starting somewhere who's listening, is there's beautiful stories like this. Eventually you can buy properties, bigger properties, but the important thing is just remember time is with you, especially in real estate.
Yeah, time is
Nothing
Time in the
happens
good
like
in the good
patience.
team. In the good
Exactly,
team.
of course.
So it's a great point that you bring. So I want to ask you if I'm a seasoned investor where like I've been in investing in a few triplexes and duplexes within the last 5 years. I played my cards right. I have a bit of equity that I've generated, and I come sit down with you. And I say, look, Abbas, I think I'm ready to start going in, the multiplex in the commercial real estate space.
Yeah.
You're the expert. I see your face everywhere. Where should I put my money? Should
That's
I put
a great
it? But I
question.
want to put my money in stocks. Why should I invest with you?
Look, I think that's our never-ending question. Like when my buyers come see me, when your buyers come see you, the first thing you ask them is, well, what type of home do you want? Where do you want to live? What's your dream kitchen? Your dream neighborhood? The first question I ask you is, how much money do you have? Right? Which could sound rude to some first-time home buyer, which you never ask that to a home buyer, but any investor, I
Imagine.
ask, how much money do you have? And if they are offended by that question, then they're never going to buy a deal with me because
You're
I
pre-qualifying
match-
them.
I'm pre-qualifying. That's the only way I pre-qualify. I ask you how much money do you have, and then I say, great. If you have $100,000, then I'll find you this. But if you have $500,000, $1 million, then great. And I'm going to ask you, where does that come from? Because no one has that sitting in a checking account. And if someone says it's in my account, don't worry about it, then that's red flag number 2 for me because no one has $500 or $1 million sitting in a bank account. It's working somewhere else in an investment, probably in the stock market. So a lot of people are feeling exposed in the stock market. It's very high and volatile right now. So they're looking to diversify, which any smart investor does. So they'll diversify, and then they come see their commercial realtor because we're competing against the stock market. That's most of the time. So what I do is I match my sellers' buildings that they want to sell with my buyers' down payments. So if they have $500,000 and they want, an example, a 20 or 30% return on investment, then I'll find them the deal. I'll match everyone together, and I'll
You
explain
reverse
to them.
engineer it.
It has to be reverse engineered because at the end of the day, you're asking these people to remove money from sometimes the stock market or from their investment funds that are maybe it could be really performing well at 10, 15% in the last 10 years, but they're feeling a little exposed. They have too much in there, and they want to bring maybe half of that capital into real estate, which is making sometimes like double the return on investment. So for me to give them the same return on investment, they probably won't even take their money and give it to me and to find them an asset. You want to make double or triple returns on real estate because it's a bit more active. It's an active investment. Even if you have a property manager, you still got to go see the asset. You have to do your due diligence. You got to do the financing and all that stuff and stabilize it. But once it's stabilized, then if you're getting double or triple your money against the stock market, then they'll happily bring over that capital to the real estate. So yeah, I mean,
You need to give them a reason to
you
take
have
out this money for sure.
It has to be worth their while, right?
Yeah.
And they have to. We're now speaking their language, the lingo of math and investing and return on investments and IRR and all that stuff and the cap rates. This is what they need to know and hear about. So that's where we come in, and we're just matching our sellers with our buyers. We don't work with 25 million buyers at a time. I usually work with 3 or 4 buyers at the same time. And once we find that asset, we match it with our seller and we close it. So a lot of our deals are off market. Like we don't even put a sign out. We can sell 100 unit portfolios and the tenants didn't even know we sold it, right? So there's no sign, there's no nothing, because we want to make the least noise possible with these types of assets compared to when you're selling the $1 million home. You have to make that real, that everything. Like we've sold tons of assets that no one's have ever heard about because we can't even talk about it because we have NDAs.
Oh, really?
Yeah. So which is fun. I wish I could talk about some of these bigger assets, but at the end of the day, it's the commission that does the talking, right? So that's what
Yeah.
we're happy about. So at the end of the day, it's all about numbers because smart people invest in the stock or in real estate. So we're competing against that, and my job is to make the numbers work for them, and if it doesn't, find them the deal.
Cool.
Are there some deals on the commercial side, like actual commercial?
Yeah, we have some pretty good stuff that we've seen, like some smaller strip malls. The best one are the strip malls where you have like nail salons, faux shops, sushi shops. We don't have a bunch of those, but those are the best because the rents are low, and then when the tenant leaves, you can increase it. It's just a different game. There's no tenant protection there. Like if you don't pay your rent in the commercial, you're out.
Apparently the best tenants are dentists. The worst ones are karate shops.
It depends on where, but karates are always a good equalizer for your basement unit that can never be rented, right?
That's right. That's right.
True.
So I like them all, but commercial there's good. There's huge industrial deals that are selling too. So you can have like distribution warehouses, like from your local suppliers who are delivering Amazon packages in our smaller like last mile delivery services. And you have like IKEA and Amazon, like buying up stuff in the greater Montreal area, and even in Ottawa, because there's huge industrial deals. So commercial, there's money to be made.
well.
Yeah. There's
What
money to
about
be made.
office retail? Is it bad like it is in the States and some other cities?
Yeah,
or-
it's very bad. Yeah. Office is one of the most underperforming assets. Retail, not much because it depends where. Like your basically there's pockets like downtown core and where it's empty and your favorite coffee shop when you used to go to work is closed and it hasn't been open for 5 years. Those are the type of assets we can't move even at a good price.
Yeah.
So the downtown really needs to be revitalized. There are projects here like the Sens are coming downtown in Ottawa, which is going to be great for
Brand Flats.
they're
It's
going
gonna
to
be good for
liberate.
all.
It's going to be good for downtown Ottawa. It's going to be good for downtown Gatineau and Hull. I think that's going to revive that economy.
We don't have a
in 10
downtown
years.
yet in Hull, but it most likely
It should be there.
It should be there. Yeah.
It should be there. Promenade du Portage is one of the coolest streets in Hull, and Aubry, and where Quatre Jeudi and all those cool little all
Yeah.
those little restaurants that we all like to go to. That's where the hub should be, and it will be.
Eventually.
So actually buying real estate there at really cheap price is a great opportunity if you can be patient.
We're
that's what
starting
I'm
a
saying.
fund, so let's go.
Exact, but no,
It used to be this spot though.
yeah,
I mean-
it was like you would go eat lunch on a Thursday in Hull, and same thing on Spark Streets, and at 12, and the streets would be full till 4 or 5 p.m. because no one would go back to the office.
We worked at the SCQ when we
Yeah.
were younger, and it was packed. But this has to do as well with teleworking. I'm assuming when everyone's gonna go back to work full time, it should be a bit more vibrant in those places, or not?
I mean, we'll see. I think in the long term, it will come back to what it was. Like people are craving human connection and all that stuff, which is normal. But a lot of people have formed the habit of not going to work, missing traffic, and even if they're in the office, they're there 2 or 3 times a week, and they're in, they're out because they want to go home. But there's a flip side to that where your neighborhood bars are thriving. Like if you go to Westboro, if you go to out some restaurant vibes outside of the downtown have been like really thriving because people work from home, live there, they'll go out near their place. So
They
they're-
don't want to go too far.
they don't want to go too
drink
far.
or-
Yeah, you have restaurants who've been open here and there. So I think in the long term, retail office should make a comeback, but but not right now.
Yeah.
Interesting.
Okay.
Interesting. Okay. I mean, no, that wraps. It almost wraps everything up. I think we can do like a little segue back to the residential side in terms of, we have a lot of sellers asking us. So, what are the tips you can give us to maybe help us create some value in our home without investing too much money? Right, I think we had spoken about this previously.
Yeah.
Not to tell our client, yeah, you have to finish your full basement and do your whole kitchen. Like there are little hacks our clients can do, and
Of
we can
course.
probably share a bit of tips with them. Just
Yeah,
on
and
the
I
residential
think
side.
you have to start, and it's really neglected by a lot of agents in the region. But you need a staging. You need to do a staging in your house. It doesn't cost nothing. It's included in the package, and
If they
you
have a
know,
good realtor.
if they have a good realtor, of course. But yeah, it's free. It's free for you guys, and it's just gonna help you sell the property probably at a higher price, and just presentation will be more attractive for buyers.
No, you're right. Because, and I always say this when we sit down with clients: you can't make a good first impression twice. And all the consumers are on their phone.
It's like
right?
a dating app. If you put your worst picture, you won't have any swipes.
Yeah,
It's the same thing,
yeah,
right?
exactly. Yeah, I mean, client retention is in anything
Yeah.
is very very short span. It's the first 5-10 seconds, and we try to do that with the homes as well. So just having a stager, the right photos, usually helps.
Yeah.
And that's a great point.
There's other things apart from just the staging.
Yeah, no,
right?
there are small little things like
I think staging is the most important.
it's the
Of
most
course.
important. I had done a video as well, I think a few years back, but it still relates to today's market where, curb appeal. If
Yeah.
it's spring, summertime, just the curb appeal because of first impression. Usually the first photo you see is the home, right? It's
Yeah.
the facade. Adding some mulch, doing a bit of landscaping if ever, if you have grass that's dead, maybe help that out a little bit. Inside the home, if you have some carpet, you can change the carpet or clean it, right? If you have some hardwood floor where it's not all scratched up, you can sand it, stain it. That helps. You can change some light fixtures. You can change some door handles.
It's small little things.
Small little things with the staging, right? So,
Yeah.
I mean, look, boys, I'll wrap it up today.
Yeah.
If you guys have nothing else to say. So, I mean, look, for our clients, whoever's listening, if you're into buying, selling, investing, you want service and advice based on real numbers, not social media opinions, reach out to Carlos, Ali, or myself. We work with people who want clarity, strategy, and some results. And if you've enjoyed this episode, feel free to follow the page, the podcast, share it with everyone you know and you love if you had any insight or gained anything positive on it about real estate. And we'll see you guys next time.
Perfect.
Take care, guys.